your roadmap to the latest in auto. Welcome to Highway Herald. April 2025 roared in with a jolt to the global financial system. The euro surged to a 3-year high against the US dollar, sending shockwaves through markets. The cause? President Trump's aggressive tariff push, which rattled investor confidence and cast doubt on America's economic stability. As trust in the dollar ran low, countries began adjusting their strategies. In this video, we'll break down the major triggers, currency shifts, and global fallout of this economic shakeup, plus what it means for the road ahead. Number 5. Tariffs unleashed. How trade wars shifted gears globally. In early April, President Trump dropped the hammer on global trade, launching a sweeping 10% tariff on all U.S. imports, with even steeper hits for select nations. China took the biggest blow, slapped with a punishing 145% rate, while the EU faced a hefty 20% duty wall. Marketed as a shield for American industry, the move landed like a sledgehammer on investor confidence. The reaction was swift. Within 10 days, the euro soared from 1.0807 to 1.1351 against the US dollar, a 5% spike that signaled more than just volatility. Investors were bailing on the dollar, and the European Central Bank's calm, consistent monetary stance made the Eurozone look like the safer bet. Mixed messaging didn't help. Trump's 90-day tariff pause for some allies excluded China, raising red flags and stoking more anxiety. Capital fled U.S. markets, dragging the dollar index down to 99.78, its lowest since 2023. In global finance, currency values reflect trust, and by April 2025, trust in the dollar had taken a hard skid. What started as a power move triggered a global reassessment of U.S. economic leadership. But what happens when the currency shock begins to ripple through the entire financial system? That's where we turn next. Number 4. Market mayhem. Treasury yields soar, stocks tank. The fallout from Trump's tariff shockwave didn't just shake currency markets, it rattled the entire financial engine. Wall Street flared up like a misfiring ignition, with volatility roaring through every sector. Even the U.S. Treasury market, typically the go-to garage during economic storms, was thrown into disarray. Immediately after the tariff announcement, yields on 10-year Treasury bonds surged from 4.2% to 4.43%, a spike unmatched since the 2008 financial crisis. Long-term 30-year yields also shot up, marking their fastest 3-day climb since the early 1980s. Behind closed doors, institutional investors were bailing out of complex positions, basis trades, swap spreads, you name it. Liquidity vanished. Nerves frayed. Then came the stock market's blowout. The S&P 500 and NASDAQ skidded into correction territory, with the S&P tumbling over 10% in just 2 days. The Dow plummeted more than 1,500 points on back-to-back sessions. In under a week, over $6.6 trillion in market value was wiped out. Safe haven instincts took over. Gold soared to $3,223 an ounce, while whispers grew louder that China and Japan might cut their U.S. Treasury exposure, a nightmare for a debt-heavy America. This wasn't just a market dip, it was a full-blown confidence crash. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to bring you sharp, timely updates on the intersection of vehicles, policy, and global trade. Now that we've seen Wall Street react, let's look at how Main Street is absorbing the hit. Number 3. Real-world fallout. Tariffs take a toll on households. The impact of Trump's tariffs wasn't confined to Wall Street. It hit Main Street hard. American households felt the sting of rising costs everywhere, from grocery aisles to garages. According to Yale's Budget Lab, the average family now pays an extra $3,800 annually due to tariff-induced price hikes on essentials like appliances and auto parts. Inflation surged, with 2025 consumer prices projected to rise by 2.3%, fueled by import costs, supply chain bottlenecks, and parts shortages. The auto industry was especially hard hit, facing delays and increased costs for everything from EV batteries to steel bolts. The economic outlook dimmed. The Federal Reserve downgraded 2025 GDP growth from 2.1% to 1.7%, while the OECD forecasted just 1.6% for 2026. Meanwhile, a ballooning $1.8 trillion deficit and a weakening dollar spooked investors, pushing them towards safer currencies like the Swiss franc and Japanese yen. But the US isn't the only one adapting. Its allies are making bold moves of their own and distancing themselves in the process. Number 2. Canada and the EU shift into a new gear. As the US floored the tariff pedal, key allies like Canada and the European Union began rechecking their routes. Trump's unpredictable trade moves weren't just frustrating, they were a clear warning sign to start mapping out economic alternatives. The reaction was swift, with US tariffs climbing to 25% on Canadian goods, 10% on energy alone. Canada fired back with $29.8 billion in retaliatory tariffs targeting steel, aluminum, and the auto sector. But this wasn't just a tit-for-tat skirmish. In early 2025, Canadian Prime Minister Justin Trudeau met with EU leaders Ursula von der Leyen and Antonio Costa to strengthen their economic alliance. This move builds on solid ground. The CETA agreement, in place since 2017, helped boost trade between Canada and the EU by 65% through 2022. EU exports to Canada jumped 60%, and Canadian exports reached $34 billion. Now both partners are focused on strategic independence, from exploring European defense equipment to loosening ties with US logistics. For the auto industry, this means potential shifts in suppliers, routes, and deals. In a world where trade trust matters more than ever, allies are choosing reliability over legacy. But as allies recalculate, America's rivals are doing more than adapting. They're re-engineering the whole system. Number 1. The BRICS engine roars into de-dollarization. While America's allies were busy recalibrating, its global competitors hit the gas. For the BRICS nations, Brazil, Russia, India, China, and South Africa, Trump's aggressive dollar-first rhetoric didn't intimidate. It energized them. At a fiery campaign rally, Trump threatened 100% tariffs on any BRICS country attempting to undermine the US dollar. But instead of backing down, these nations doubled down on de-dollarization. China expanded its network of UN-based trade deals. Brazil and India started settling oil and energy transactions in their local currencies, like the riel and rupee. The International Monetary Fund's 2025 report revealed a telling shift. The dollar's share of global reserves dropped by 1.8 percentage points, while gold and non-dollar currencies gained ground. Meanwhile, Russia and China accelerated their plans to develop a BRICS-backed digital currency designed to bypass traditional dollar clearing systems entirely. Central banks in Asia, Africa, and Latin America followed suit, diversifying reserves into regional coins and alternative stores of value. Even global institutions like the IMF and World Bank began acknowledging the shift toward a multipolar reserve world. And all of this leads us to one looming question. Is the dollar's dominance running out of road? Final Gearshift. Is the dollar's reign running on fumes? We've reached a critical moment on the global economic highway. What began as a bold move to protect American industry through tariffs has triggered international backlash. The euro is gaining strength, trust in US debt is slipping, and BRICS nations are rapidly developing alternatives to the dollar. For the auto industry, this isn't just background noise, it's a direct hit to pricing, sourcing, and supply chain strategy. From EV batteries to performance parts, the world is shifting away from US-centric trade lanes. Now we want to hear from you. Are Trump's tariffs helping or hurting America? Is de-dollarization a serious concern, or just geopolitical noise? Should US allies keep building new partnerships, or try to rebuild ties with Washington? And how will all this affect your next vehicle purchase, repair, or investment? Share your thoughts in the comments, and don't forget to subscribe to Highway Herald for more automotive insights and global updates. You can now check out any of the videos on the screen. There's more exciting and informative content waiting for you.